Hi guys, how you doing? Thanks for tuning my YouTube channel. So I'm here to analyze AerCap and tell you in the process what I think is a good investment. Mostly all this presentation is about AerCap, and there is a tiny part about the acquisition of GCAS. Just to let you know, I will not show any of my regular scenarios because it doesn't make sense since the future acquisition of GCAS. Anyway, if you want to check my last video related with Bristol Mayer, Squibb Mayer, please click in the upper part of your screen or find the link in the description below. Please read this slide, the disclaimer, um, just the regular disclaimer. And this video and its content is only for educational purpose. So if you want to invest in any security, please do your own research. Thank you. Well, these are some of the questions that I want to answer with this presentation. It's basically the same questions than previous video. I think there is a huge value when you make up a process and then follow it no matter what. Of course, you have to be flexible when you make mistakes, but trying to make your investment like a process, like an habit, is I think is a key for to be successful in any discipline. First of all, nowadays the stock is around 60, and I bought it in 49, so really it's not too cheap. But really, to be honest, I make a huge mistake buying the company so late. The reason is because I was worried about the industry when the virus hit and not expected much of the industry. But you know, the vaccines and the quick response of the governments really changed the paradigms of vaccine manufacturing and fiscal stimulus. So anyway, I do think that this stock has potential, even if the regulatory approvals negate the transaction with GCAS. Well, a little introduction about AerCap. They are the leading lessor in the globe. They have around 900 aircraft that they lease over long-term contracts. They manage over 100 aircraft of other investors, and also they make money selling their old fleets in very good prices. First, I want to talk about air passengers traffic. As you can see, there was an 5.2 annual growth rate until COVID. Then the COVID crash, and now it's trying to make it up again. So regarding estimates, this year will be better than the last year, but really way below the pre-pandemic levels. So in the right part of the slide, we can see a chart that shows the less contractions in air traffic in each of the recent crises, and after that the traffic just went up again. So in my view, I'm thinking this is a very clarifying chart, because even with past crises such as 9/11, then the trend just went up. So we have a very good chance of do it again. Well, here you can see the real-time statistics. You can log into the website if you want, Flight Radar 24. Well, we can see that the trend is recovering, so that's a very good sign. We continue with this chart just to show you the relevance of the lessors in the aviation industry. It's pretty significant, and I think there's a big chance that this percentage will be more than 50 in the coming years. I think the debt and the bankruptcy of the airlines will play a very important role in the coming years. This slide is only to give more emphasis about the lesser participation. As you can see, for example, American Airlines has almost 50% of the fleet leased, and we have the same situation with LATAM, the biggest airlines in Latin America. Now, low-cost carriers are often new startup business with little capital available and no credit history. So mostly of the times they use a sale leaseback transaction or just a lease transaction because provide fleet flexibility and also balance sheet flexibility for this new company. What I'm trying to say here, that is we have a good chances in coming years that we will see more of these low cost carriers, and that will be better for the lesser business. Now, AerCap leadership. You can see in these two charts of Statista that AerCap in 2019 was the leading in fleet value and almost leading in fleet size. I show you this chart, guys, because make me understand who AerCap is competing with and also the advantage that has over the other competitors. So as you may know, AerCap is one of the biggest traders of aircraft in the globe. When they sell their used fleet, they truly makes money over book value, and that's really amazing. Also, you can see the utilization fleet is over 97.5% in 2020. This means and could surprise you guys because the number, but even in the recessions, they figured out to maintain this utilization fleet near the highs. So it's very interesting. Well, the pandemic, as we know, hit lesser's business a lot the last year, but I will argue that the worst happened. You can see that they are starting to recover previous Q4 2019 cash flow. That's very good news for the stockholder. Now, please pay attention to the right chart. I think is the most valuable of all. You can see the average duration of the lease is 7.3 years. This means that the average cash flow of the company is also 7.3 years, right? So if the average duration of the debt is related with the average age of the owned fleet, and that is 6.4 years, this means that the lease cover all the debt duration, and even they make money after it when they sell their old fleet. So if the managers continue to supervise this important metric, they will make money over the years, and that's for me is simple mathematics. I want to talk about AerCap debt, specifically about debt equity ratio, since they are a kind of financial type of company. 3 times debt to equity, it's okay given the conditions. Now, as you know, they have like 5 billions of excess coverage. If, for example, XYZ event happen again, we can be very confident of the solvency of the company. Now, it's important to say that the debt equity ratio after GCAS merger will be around 3.5 or so. Regarding my calculations, but it will be no problem for the company to deal with this amount of debt. They actually deal with this very nicely after acquiring International Lease Finance Corporation in 2014-2015. Now, we can see the liquidity levels that we talked before, and has been very consistent during the past year. So the managers are very aware this is key to maintain the business afloat. Um, in the right part of your screen, we can see the debt maturities that could be covered easily with the liquidity budget that they have each year. So if we add GCAS transactions, it brings like 5 billion of operational cash flow and 1 billion of net income or so. So the total debt will be double, but certainly they are in good situations to cover this responsibility. Now, talking about the executives of the company, let's focus on Angus Kelly. This guy is the CEO. He started working for the company in 1998. And in 1998, the company name was Guinness Pitt Aviation. Then after the consolidation with AerCap Group, he keeps his job. So after that, AerCap Group was acquired by Cerberus Capital, who renamed this company as we know it today. What I'm trying to say here is this guy know about this business. He started working the low middle positions, and now he's a millionaire. So the incentive for this guy to make the job well are really there, and you guys can see clearly in this picture. This slide represents the company last 9 years of stock outstanding. We can see that the first increase in 2015 was related with the acquisition of ILFC. Later, the company managed to buy almost 40% of the stock. I think this track record is wonderful because they know the power of the stock repurchase and gives me a lot of confidence that after GCAS acquisition they will do it again. Now, lessors are frequently measured in their capacity of increasing their book value per share over time. Um, we can see the annual growth rate from 2014 to 2020 was pretty consistent, right? So we expect that in the following years, in 10, 15 years, the managers could do the same. Well, this is another important slide for me. We can see the earnings per share are increasing with a compound annual growth rate of 22. Obviously, this not include 2020, but 22% of increase over time is really a powerful number, In the following slide, you can see the return in net tangible asset, a ratio that I like to use. This ratio makes the comparison with other companies in different industry pretty easy because it does not include all intangible asset that a lot of time distort the analysis. So now you can see the AerCap has 14 return or adjusted return in nets. For example, the company has better return than one of the biggest competitors, that is Airlist, and a similar return than Bank of America, and a lot less than Google. The final conclusion for me is that it's a well-managed business, and you can understand the industry with a bright future. I will say that the airlines industry is another different animal, an industry with a huge operational cost and only a few can be profitable over time, but they have they have a lot of leverage with government, so that is a plus for them. Almost finishing this presentation. Here you can see a volume profile chart. It's a composite of the last 5 years in a weekly basis. Well, we can see that right now we're trying to break the all-time highs in the 60-64 range, where we can see a prominent high volume node. Like I said in my last videos, my decision to buy the security is solely fundamental, but when I put a trade, one of the things I like to see is volume increasing when it's going up. This is because price is just an advertising mechanism. Volume confirms the price discovery. By the way, this chart only tells you where in the last year investors participate in the best. More volume, more participation; less volume, less interest. Remember, the market goes from balance to imbalance. Now, as you may know, the most important thing for me is know if the company has a moat uh, against their competitors. So the whole presentation is about that. You know, this slide is less relevant than the previous ones, but you know, if you can see the left part of the screen, the price to book that the stock was trading after the acquisition of ILFT. It's really amazing because it soars to 2.2, but really the median and conservative is around 0.8 or so. So AerCap plus GCAS is quite a deal, you know, with a 25 billion in cash and notes plus 111 million of shares involved. Some people could think it's too much, but in my view, it's very interesting if you think in a longer term perspective, because should give this new company leverage versus their competitors in terms of low cost of financing and also better prices with Airbus and Boeing. The greatest economies of scales should give the company better operation costs, and also could give possible listed with bigger airlines, because now they have more conditions and capacity, you know. Now the United book value per share is around 74.72. So if we take the median price to book, the expected price is around 59. This is the current price, right? So it's all good right now. But if we want to be more positive, sort of, we could say that given the condition of the acquisition, the price to book value will be around 1. This means that the stock has a 25% or so of upside. Well, like I said, speculating in the price really is not my thing. I really think the company in 5 or 10 years, will be in better shape, and if the underlying economics don't change, I think it's wise to buy this company and sail with the same boat. Well, that's all, guys. Thanks for listening. I know my presentation are bored. I hope you like it. Again, sorry for my rusty English. You know, I leave you with this phrase that makes a huge impact on me. Hopefully, see you in the next weeks, in the next video. Thank you.